Hello friends, welcome to Pro Trading Zone. So today it was a good day. We didn't make much profit, we made a really small profit, but if we would have hold on to our position and we would have followed the rules properly, we would have made good profit today. So we will be discussing about the view of the market we had in the morning, what were the pivot points we choose, what is zone trading, how to take a trade in a directional format by looking at the chart patterns, then what was the strategy that I have put in, what was the book profit. Everything would be discussed in this video with detail, with example, and how you should have traded properly. So let's go into the market analysis, and first we will look at the what was my market view. So once market opened approximately 150 points above the yesterday's close, the thing I understood was that market can run on the either of direction for a long print. So what I took was a non-directional trade at first. But before taking a non-directional trade, I had to decide what would be my exit points or what would be my important pivot points for the day. So what are the pivot points? Pivot points are the levels that we draw on the chart depending upon the previous day, previous week, previous month, important points where we find that market could make a move or show some price action. So today's pivot points were 36,943, 36,875, 36,734, 36,100 and 36,270. But there were two important pivot points that we drew dynamically today. One was at 36,502 and another was at 36,728, approx 2628. So here we considered that market should be in this range for us to be in a non-directional trading strategy. So first we will discuss about the zone trading and what are the rules we considered and why pivot points were important. First, in the zone trading, you take a non-directional trade where you believe that market could be going sideways. It is not a necessity that you will take a trade in the morning, early morning. It is not a necessity that you take a trade early morning at 10 o'clock or 9 o'clock or 11 o'clock. Nothing like that. Whenever you find that market is on the sideways or will go sideways or will follow these two path, it will be between these two important pivot points that we have drawn, you are good to go with non-directional trade with zone trading. Then once you have taken a trade over here or anywhere, you do not take any other trade until and unless the zone is breached properly and you feel like that market would be going directionally now. So when market goes directionally, as we are in short put and short call, as we take a non-directional trade, if market goes down, we would be cutting our call put short position and run call short position to the profit. If market is going up, we will be cutting our call short position, let put short position run and make profit. So these are the basic understanding of the zone trade. For us to make profit, it is important that we follow these rules very promptly. So we have taken a trade over here and our thought process that if market goes on the sideways and between 36,728, we took a trade over here at 936 and our thought process was that the market should be between the pivot point of 36,723 and 36,504. If market is between this, that is between our zone, we were expecting a good theta decay. But here we had to take a little bit of a discretionary trade or decision where it went out of the zone. This comes into your understanding when you do zone trading for a very long period of time. Later when market came over here, I exited my trade and you can see both the shorts. These shorts are put in the live trading session and when the market is running live. I put in shorts every day where there is a live market running. I am doing my trades and posting it. Here are the shorts. So we are putting short straddle and short strangle over here and we expect market to go little bit of sideways and then go directionally. So we have put in short strangle of 36,600 call short and put short. Currently we are looking at a 10,250 loss with 0.06%. In short Strangle, we have put in 36,700 call short and 36,500 put short. We are currently looking at 6,625 rupees profit. So we are exiting our trade and we are not making much profit today on the option expiry of 21st, but we are going to put another strategy of next week and take another trade. So we are making a profit of 10,000 at 0.06%, and we are exiting the trade in short Straddle. In short Strangle, we are looking at a profit of 31,250 and we are exiting the trade of short Strangle. We are exiting all our trades and booking profit. So we are putting short Straddle and short Strangle over here, and we expect market to go little bit of sideways and then go directionally. So we have put in short Strangle of 36,600 call short and put short. Currently we are looking at a 10,250 loss with 0.06%. In short Strangle, we have put in 36,700 call short and 36,500 put short. We are currently looking at 6,625 rupees profit. Zone trade. For us to make profit, it is important that we follow these rules very promptly, but have to keep an eye if there are some discretionary trade that needs to be taken to make a good profit out of. So one of the reasons why we take zone trading's pivot point is that you will make an understanding that here market didn't move above the point. Again it tested over here, it again got tested over here, it again got tested over here, it again got tested over here. With this testing of the upper resistance, it shows that this is an important pivot point that makes sense for us to consider not to take a trade until and unless it is properly broken. This was a tricky situation where you could have taken a trade for a long, or if you would have expected market to go up, but it turned down, and again when you expect that it would be a retracement trade, the market straightforward went up. This accuracy will only come once you find yourself doing the same strategy again and again and understand how market works around pivot points and how the price action behaves. So today we took a trade at approximately 9:36 on this candle, and then when this big candle was shown, I was little bit worried that we would have to take a directional trade, and it was my view also, but once it came over here I hold my horses that I shouldn't take a directional trade because the market was on the bottom. The RSI was showing that it is almost zero, and as soon as it went up again I was convinced that market would be in the range, but I didn't take much of a risk today and made a small profit of 45,000 to 50,000 rupees today, and I exited around here. If I would have hold my position to all these levels or even exited over here, we would have made good profit of up to 2.5 lakh to 2 lakh rupees over here. But it's okay. The best thing about zone trading is that it doesn't make you take irrational decisions. Even though you exit the trade early, you would be coming out with a small profit or a small loss or a big profit, but never a big loss until and unless you do not follow zone trading rule. Now we will see what were the chart patterns that made sense to us while following the zone trading. One of the ways that you can make good money out of zone trading is that you only take trade when there is a proper exit from the zone. That is, when it exited this pivot point or this pivot point properly, the market gives a really good move to make good profit in a directional trade. But today if you could try to make some chart patterns or make some assumption that this could be a trend line on everything, it was totally worthless because it wouldn't have made much sense. The only thing about zone trading that makes sense is that many of the chart patterns that find itself to be false or doesn't work in different working environment, zone trading make you understand how exactly the market is behaving and what trades needs to be taken. So if you consider this box so if you consider this box as a zone, once it was exited on the upper side, it gave you a good run. No matter how many chart patterns you would have drawn here, it is worthless because nothing would have made sense and nothing is good enough over here. Once it exited over here, this was the third time it exited. So even though our pivot point was here and it was breached twice, so it activated another level for us to take a trade. Only and only then you should have taken a trade. We would have considered this level as an activation level of that market is going on the directional fashion, exponentially up. So if you could see this properly, the reversal candle is formed exactly at 36,875 and it took a reversal over there. Then again it went up and it took a reversal from exactly 36,875. It went up again, but this is how you are sure that the pivot points you have taken are really good for your trading. And the one more thing that you need to understand is that we use VWAP with one standard deviation. This chart that you look at and the indicators that you are looking at, it is VWAP with one standard deviation that we have been looking at. So just when market goes out of the green zone and crosses one of the important pivot point to the upper side, the activation of the long is initiated. So today there was two more activation of longs over here and here, but the exit of this is at the blue line, that is the VWAP. Even though the stop loss is heavy, but it helps us not to trigger stop loss or exit the trade when there is no necessity of exiting the trade. So even though you would have taken a trade over here, until and unless it doesn't breach VWAP, you shouldn't have exited. And once it crosses a green line with a blue line properly and goes up, you had a good example to take a trade up till here or till here, or if you feel very adventurous, you could have taken a trade up till here, but as there was no red candles, you could have exited wherever possible. But for us, it is important to understand that when you use VWAP with zone trading, once green line is breached and the blue line is breached, your trade is activated and stop loss is at the blue line. But the problem is that the stop loss is too far away, and if you consider green line itself as a stop loss, you will hit your stop losses very fast and very often. But once it goes on the upper direction, you would make brilliant money out of the market. So this was for the day. If you liked my analysis and you like my solution, how I take a trade and make sure that I do not make a loss because of the undue behavior of market by going on its way, you have to understand market is superior. You have to look what market is trying to tell you, not judge what market is doing. This will help you to make right decision way more often. If you like my analysis, you want to see more content like this, please like, share, subscribe, send it to a friend who is in great need of this and wants to make a career out of trading in the market. But I request, before looking at my shorts in the live session, please do your own research, understand exactly what I am trying to explain and why I am taking a trade, then only take a trade. Be careful while taking a trade, do your own research. Please like, share, subscribe, come again on my channel. We will do trading in the live session and you can look at my shorts in the live session. Thank you.